Welcome to the Investment Banking Leaders Podcast, brought to you by the Investment Banking Leaders Club, your exclusive access to the industry's most successful leaders. These experts have closed thousands of deals, generating hundreds of billions of dollars, and they're here to share their strategies, insights, and leadership lessons that can fast-track your career. But the learning doesn't stop here. Join the Investment Banking Leaders Club at ibleadersclub.com for even more exclusive insights, leadership frameworks, and career accelerating resources and events. Thanks for joining us, and best of luck on your growth journey. I'm pumped to be joined by one of the most respected and forward-thinking voices in the secondaries market, Adrian Millan, who's a partner at PJT Partners in New York. Adrian brings with him a remarkable journey from starting out in corporate finance at Credit Lyonnais to Chase during the telecom boom of the late 90s, through a corporate development role at Citi, and later became one of the founding forces in Blackstone's LP advisory practice. And today he leads one of the largest and most innovative secondaries teams on Wall Street, helping clients navigate a very fast-changing, high-growth segment of private capital solutions. Now, we'll talk about why secondaries is one of the most exciting places to be in investment banking right now, and what makes PJT a magnet for talent, how innovation and AI are reshaping the banker skill set, and what it takes to lead and thrive in a constantly evolving market. So I'm excited to get into this one. Thanks for joining us today, Adrian, and welcome to the Investment Banking Leaders Podcast.
Thank you, and thank you for such a very kind and thorough introduction.
My pleasure. Let's get into this. So why don't we start with your journey? As I mentioned, you've worked across a fascinating range of roles: corporate finance, development, cross-border M&A, and then eventually the secondaries. So what drew you to this part of the market, and how has that diversity of your experience really shaped the way you lead today?
It's hard to remember back this far, but when I was thinking about where I wanted to go post undergrad, I really was looking for roles that set me up to make an informed choice about next moves in my career. So one of the things that attracted me to investment banking, and specifically Chase's investment banking analyst program, was the depth of the training and the ability to see a number of different parts of the bank, to really experiment and understand what may or may not be my best course from there, by actually directly having a chance to meet the professionals, to understand what each of the businesses did, and then also go through a very rigorous multi-month training program that allowed me to really have the core skills that it took to succeed. So I think with that foundation, it really then allowed me to continue to gravitate towards a number of different areas within banking that led me to ultimately secondaries and my role today. But moving from traditional investment banking, I wanted to move into a corporate setting. I wanted to work for a single client. I wanted to understand some of the strategic thinking that it took to make a decision to divest a business or to acquire a business. And that was the move to Citigroup post-business school. And then ultimately, when I moved to Blackstone, I had been selling the bank's balance sheet off of what was a $12 billion base to really drive liquidity heading into the GFC. And I think it was really that experience that opened my eyes to the secondary market and what was a very nascent corner of the investment banking ecosystem that has now grown into a $150+ billion industry with tremendous tailwinds.
Exciting. Thanks for sharing that. And I hear a lot from leaders about how that variety, the opportunity to build skills and develop different areas throughout the career really leads to success. So it's great to get that insight. Let's dig in onto that a bit deeper. You mentioned that working with a wide range of clients, from state pensions to sovereign wealth funds, has taught you a lot about there's not one size fits all, and you need to have much more of a unique and refined approach. So how's that influenced the way you think about client services today?
There's really three separate buckets that we operate in. So we operate in LP advisory, which is helping clients think through liquidity across usually broad portfolios of interests. We operate in the GP-led part of the market, which is helping GPs think through liquidity solutions, which are usually in the form of a continuation vehicle for a single or a multi-asset And then we have partial liquidity solutions, which are either of those two prior buckets, but instead of selling outright or instead of providing a full exit, we might have rated debt or preferred equity or other solutions that provide a partial exit solution for either the LP directly or for the underlying LPs with the GP organizing that event. As it relates to the underlying client, you mentioned pensions to sovereign wealth funds. If we drill in on the LP advisory part of our business, which I focus the most on, we certainly are trying to achieve a similar goal, which is liquidity, but every portfolio and every client situation, the level of experience that the underlying team has, the amount of maybe times that they had previously sold, just requires a range of starting points and also go-to-market strategies and what team you bring into each situation, that you can't take a one size fits all. And so one of the things that I really enjoy about this role is the fact that it has such variety. I really get excited for the chance to tackle a new client issue and also the chance to work internationally and not just focus on one market. We've been very fortunate to have quite a range of diverse clients, and also both size and the asset classes that we transact in also provides incremental variety. So I think that's one of the things that has really made this job as interesting as it has been for a decade and a half and still provides tremendous tailwinds going forward, is that there's just so much of an untapped market. And I guess the forward pipeline of things that need to be addressed is so robust that you have an opportunity to really challenge yourself with each incremental problem, that the last solution was not, the best and the most relevant current solution. You almost have to use the pattern recognition of the past, but also take a clean slate approach. Let me bring my best ideas. Let me bring my best information forward, and not take that complacency that often creeps in when, oh, I've done this before. I've sold these assets. I can just do it, rinse and repeat. And so I think that if you take the client types that you mentioned, several pension plans that we've worked with need a very hands-on approach with a very robust end-to-end process. Marketing is often a similar exercise, but the setup and the closing process for different clients is where I see the most difference. And certainly for some of our most sophisticated sovereign clients that have sold quite a bit or are very active participants in the secondary market on the buy side, they come with a much more surgical approach usually to what it is that they want to do, with very clear ideas in mind and a very narrow band of outcomes in which they will transact. So much more opportunistic typically on one end of the spectrum, much more end to end on the other end of the spectrum, and there's a lot to do in between.
It seems rewarding and you clearly really enjoy it and that your passion comes through, but also challenging. It seems like you need that variety of knowledge, variety of skill. You need to understand the solutions and be creative and ready to be innovative as well. So is that doing the reps where you build that skill set, that knowledge? Is it something else? How do you succeed in that type of environment?
I think a big part of why clients look to us for advice is that we've typically seen it before and seen it many times, and we can bring that benefit of past experience to ensure that we bring best practices and the right blueprint for a transaction forward. I think that one of the things that I actually find quite compelling about the LP advisory business is that even though the activity is relatively unchanged over the last, call it 10 years, the approaches to pieces of the process have changed quite significantly. And so I think that even though you are speaking with general partners, you're marketing a set of interests, and then you're transferring those interests with counsel, facilitating that trade, there's so many nuances to the pieces of those three parts of the puzzle that leave a lot of space for innovation. And so you have to benefit from the historical experience, but you also have to challenge the status quo when you're trying to maybe do more deals or do larger deals, tap into different pools of capital. So there's so many nuances to the uh, beginning to end process that you need to always assume that, as I think I've said previously, there's not a one size fits all. You need to take a varied approach.
It's balancing that expertise and the deep expertise you have, but then also being ready to challenge the status quo, as you put it, which makes a lot of sense. And you're the first secondaries leader that we've had on the podcast. And you've already mentioned a couple of times the excitement around the tailwinds within the industry. You described it as a space with tailwinds. You've also mentioned variety, constant evolution. Can you expand on why you see the secondaries having this tailwind and what you see ahead?
When I started in the industry, we were in the sort of single digit billions to maybe low double digit billions of market activity. So let's just say 15 billion. We're now last year at 165 billion of market activity. So a tenfold increase. I'd be hard pressed to find another industry, banking or otherwise, that has had such explosive growth. And what's interesting is that the installed base of private interests and alternatives that can trade in the secondary market is only a very small fraction of the available supply that is held by both institutional limited partners and increasingly high net worth and retail investors in our market. We're talking about turnover that's in the single digits, 2, 3, maybe 4% in a given year. So only marginal increases in that percentage turnover can create significant upticks in market activity. There are some that have put out $1 trillion forecast for 2030. So there's tremendous white space in between that sort of 165 and a trillion. And that is only 5 years away. Even if it's half of that number, that's still tremendous growth. And that's really what, in my mind, provides so much room for others that are interested in joining the industry. We've been able to attract quite a bit of talent from the kind of traditional investment banking channels because of that growth. And I think that even though it's niche, it does draw on very similar skill sets. And I think it's a part of the market that, with all of the activity that's in the retail market, many of those investors look to wanting to earn higher returns through alternatives. It's only creating more stock of the underlying sort of potential tradable supply, and therefore even more tailwinds compounding on each other. I think also the innovation that has driven more capital to come into the space, whether that's debt capital, insurance capital, also many GPs that have entered the space as buyers themselves that have only ever been traditional buyers of assets have moved into secondaries because of this growth. You have many forces together to propel future activity. And that, to me, is a pretty unique ecosystem that certainly keeps me coming back to the office every day with the enthusiasm that I do.
I can feel your energy for it, and explosive growth, as you mentioned, it's been proven, and what's ahead looks great too. And I can understand, particularly, we see some of the troubles in the markets at the moment, and yet your projection, your energy, and what's going on in your area is a lot stronger. So I can understand why more and more of the investment banking industry is attracted to the secondaries area. You touched on talent. Why have you become a destination for top talent? What are you doing differently to attract and develop the next generation of talent and leaders?
I think one of the things that's unique about the firm and our team is the fact that there was a lot of purpose in how we were put together. We spun out of Blackstone 10 years ago, and at that time we were a much smaller version of what we are today. And I think that leadership saw where we had strength and where we needed to build. There was purpose in bringing together either professionals or whole businesses. There have been a few acquisitions that have brought full teams onto the platform. And I coupled with a culture that really fosters collaboration and really, I think, facilitates different groups tackling problems together is pretty unique on Wall Street. I think that banks that have grown up with a strong capital markets team or a strong industry team or a strong product team often reside in silos with individual goals and P&Ls that drive that behavior and that growth. Clearly, as you scale, you need to have more rigor in terms of how different business units operate and how they interact together. But that's been a big driver of our growth, is the fact that we came together with a common goal, which is to drive a different way to kind of approach clients, approach relationships, and be leaders. And ultimately, I think that has been a big driver of the senior leadership's success at continuing to attract talent. But also, I think for new people coming in, there's a lot of white space because of that approach, as opposed to you're waiting for the next person in front of you to leave the seat to get into it. It's much more of a situation where that sort of hierarchy doesn't foster any inhibiting of one's growth. And that's a pretty compelling offering for the most junior up to the most senior person at any firm. PJT, in its formation, was pretty fortunate in having market leadership in a few pockets of activity. So those created, I think, success that begat success in other places, right? A leading restructuring team, a leading fundraising team, a leading advisory team has just propelled more and more folks wanting to follow that same lead.
Thanks for sharing, and the insight's great. I can understand why that collaboration, the lack of silos, tackling problems together, and again, the growth at PJT, the opportunity, the white space that you mentioned, why that's so enticing for those looking to build a successful and long-term career. You touched on innovation a few times, and I know in our conversations, we've talked about how you believe technology is becoming a competitive differentiator in secondaries. So could you chat to me about some of the innovations you've seen and how you're helping your team operate faster, stronger, smarter in the space?
When I was starting as a banking analyst, comparables for companies was an exercise that in some cases would take weeks, depending on how large the assignment was. So going into company financials, pulling specific bits of information, inputting them into spreadsheets, and then having those spreadsheets drive analyses. And similarly for models, doing the same sort of transcription from original documents. So even basic activity versus today is fairly similar, but the way that the information gets into those spreadsheets and the way that the analysis is set up, in some cases, is as quick as a click of a button to pull that information vis-a-vis data providers that provide that. I think it's very similar in secondaries. With secondaries, you have a transfer process, an NDA process that bookend the marketing process. Also, how we communicate with buyers in sharing information with a virtual data room and being able to provide documents that are searchable and ultimately information that in many cases is increasingly available to pull from those documents through data providers is speeding the way that folks underwrite. And as we think about the NDA process, there's been a lot of AI tools to look at precedents and thinking about how to sign documents faster. And similarly, on the transfer side, there has been a number of other activities to create portals for legal documents and to think about changes done more in the context of a portal rather than sending emails back and forth with track changes. So those are small little changes. But as I think about last year, there were roughly 250 deals of consequence that drove that $165 billion of activity. So it's not a very big number. And so if you think about doubling that, how do you double that without doubling the human capital that drives those deals? You have to break down the components of the process and think differently around the pieces and how you can innovate and bring technology to shortcut in the same way that we shortcutted the comps example. So we've been doing a lot of work at PJT to look at more so the beginning and the end of the process and really try and shrink the cycle times of those parts of the process, which is typically a 3-month process for a deal, a month for setup, a month for marketing, a month for closing. If you can shrink that down to a 2-month process, you've driven tremendous innovation in the industry. And that's where we're headed, is taking that 250 deals to 500 deals to 750 to 1,000 deals of consequence. That's what will drive the $500 plus billion by 2030. And you can't get there without significant technology driving how folks underwrite and ultimately how sellers and GPs process deals. I think the one cautionary tale, though, is it can't just be the mindless push of a button will give you the answer, right? There needs to be nuance and context and rigor. And so that's the challenge, is I think using technology in a way that's additive and doesn't necessarily present roadblock. It goes in fairly easily, but what is the output and how do you challenge it? How do you think about it? So it's changed the way that at least I, as a senior person on the team, need to look at the activities and what we're doing. But I'm very excited about some of the things that we've already done. And certainly as we roll out several of these innovations, hopefully have foreshadowed a little bit in this podcast, what are some of the things that we're doing in the background. And it will all make sense to that goal of driving more velocity of deals in our market. And certainly within traditional investment banking, capital markets, right? Technology is such a driving force for speed of transactions, for the amount of advice that can be given, the wealth of information that can be brought forward. So this is across PJT. This isn't just a secondaries only activity. Ultimately, it's one where I think that we're learning a lot around best practices as we challenge those assumptions. And it's going to be pretty exciting to see where we are in only a few years' time.
I really appreciate the feedback. And I've spoken to a lot of leaders about technology and how it can impact the industry, their teams. And you've been a lot more intentional than most in how you've explained that. We have 250 deals. We're looking to double that, but we're not looking to double the labor, which makes a lot of sense. And then can we shorten that process, and how can we shorten it? Is looking at that earlier parts of the process you mentioned and the bookends to shorten it. How do you incorporate that into culture? How do you get the team thinking in that way, especially when it's a really demanding industry?
That's an interesting question. Look, I think it's impossible to teach certain things, right? You just have to learn by doing. And I think that sort of apprenticeship model of taking someone through the process and having them pick up pieces along the way, I think one of the things that I've certainly had as a guidepost throughout my career has been, I've always appreciated when folks have left room for that moment to challenge the status quo. I think we could do this differently. I think that this took too many resources and we should do it this way, is part of the culture, part of the way that I encourage others. And I certainly myself try and run deals. I also think that we do quite a bit to take client feedback. It's not just within the team, right? It has to come from the market. We also have to take it from buyers, right? What, could we be doing better to address your needs, to shorten the cycle of how quickly you process deals and information? So I think it's having a pretty wide base of feedback. So effectively, you have an industry focus group, for lack of a better term, and that mindset of making sure that you understand that there's no product enhancement that we can't make because we're not making a physical object. So it's a pretty wide open landscape of potential change. And so that's part of, I think, what I try and remind the team of is that if we have this impediment today, we don't have many obstacles that don't facilitate at least even a conversation to change it. It may take many years and it may take many constituents being brought to a common view, but the structural impediment to change is pretty limited because of just the nature of us being in professional services and not in something that has manufacturing limitations or supply chain limitations or geographical limitations, right? This is really just around how quickly can we move information and how quickly can we think through a problem and ultimately execute a solution.
It makes a lot of sense. And I guess being open to having people challenge the status quo. You've mentioned it a few times, and I know that's part of the cultural piece there. So I can understand why bringing ideas and helping challenge things is going to get you moving a lot quicker in a lot of areas, but particularly with tech and the
At
feedback.
least I'm consistent, right?
Right,
It
that's
would be
it.
concerning if I wasn't.
For
But
sure.
no, it is very much a mindset, right? It can't
Yeah,
just be something that you do when it suits you, right? It has to be always, even in the easy deals, you need to
yeah.
think about innovation.
Yeah, and I think the openness from the leaders around that sort of topic helps a lot. And the feedback makes a lot of sense, right? Getting the feedback from the clients, getting the feedback from the team. I know that's something we really pride ourselves on at Altrum. And I know we've been working hard on technology, and a lot of that is driven by what our clients are telling us they need or what could make the process easier. So lots of similarities there I can relate to. In terms of our audience, we have a lot of VPs, associates listening today. So for someone who's a top leader, what advice would you give to them to stand out in the industry and get to the highest echelons?
I think you have to experiment, right? You can't be someone that takes a path that is defined for you, right? I think that you need to be pretty clear with yourself around what excites you and play into your goals and objectives for what you want your career to be. And at least for me, I've talked a bit about variety. I think one of the things that I also know about myself is I really enjoy international exposure and client interactions that aren't just focused on one market. Finding that out only comes from taking on that deal in that geography that may not be the most interesting and certainly may not be the most challenging, but it exposes you to something different. So I think experimentation, I think you also have to stay the course. One of the things that is a hallmark of investment banking is that there is a lot of folks that start their career here but then move on to other things because it is a fairly rigorous work-life balance, and you need to figure out what are the things that you can trade to make sure that you can be smarter, faster, stronger than the competition to be able to succeed. You also need to be pretty honest with yourself around what are the things that you define as success, so that if you experiment, you know who you are and you find all those things setting up to this being the career for you, right? You need those ambitious goals set for yourself early on so that you can build towards them, because it will not happen overnight. And I think that's one of the things that presents the most challenge to folks, is that they want to get to a point maybe a little bit more quickly than they're ready for, and they haven't done the work to really either credentialize themselves, to really understand the nuances of the business before they make that next step or they move to that next career milestone. So hopefully those are a couple of things that certainly come to mind that have been helpful for me.
There's some great advice there. And again, as you say, experiment, get some variety, understand what drives you and where your strengths are, define your success, set ambitious goals, and then set about getting them, right? So a lot of great advice there. I hope the listeners take on board. In terms of variety, we've touched on it a lot. Any advice you give to those looking to build more variety into their career? Is it speaking to staffers, banging on the right doors, getting a mentor, changing role? What advice you have?
I think it is really important to make sure that you have the right variety, for lack of a better term, is just knowing what's out there. And I
Mm,
think a big part of my ability to experiment was having peers and friends and colleagues in other industries, which was expanded when I went to business school a few years into my career. So coming out of HBS, there was a dispersion of folks that went into different industries, private equity, consulting, industry roles, to name a few. And then that led to further splintering. And so having that broad base of peers to understand what others are doing and say, what I like what this person is doing, and that was a mistake that I'd like to avoid. Just having the benefit of all of those experiences almost being um, battle tested by others as you do your own testing of your own ecosystem, I think really helps to form a more holistic view of what the options are. And ultimately, you start to see a number of similarities across different roles and careers, especially as you move up and are leading teams. Making sure that your network is quite broad is the best way for you to hedge against not having enough perspective to challenge yourself to maybe move in a different direction.
That makes a lot of sense. Knowing what's out there through the strength of your network and learning from those that are in different positions and trying things and using that to your advantage. As we move towards the end of the interview, is there a particular moment in your career looking back you're most proud of, Adrian?
One of the moments that I'm most proud of is probably the period right around the GFC. During the global financial crisis, I was at a point in the career where what I was doing was helping facilitate liquidity heading into the GFC, right? So there was a lot of uncertainty, a lot of instability. Several firms collapsed. I happened to be in a place that was less impacted, but I was certainly cognizant of everything that was going on around me. And similar to the dot-com bubble bursting back in the early 2000s, only 10-ish years later, we had another significant event in the markets. And we certainly are going through one right now where there's other uncertainties that are entering into the forward. So it was in that moment that it was pretty hard to leave one role and experiment and go to another. But that is when I left to make my change to move to the career that started at Blackstone and then ultimately led to the spin out to become PJT Partners. And I think it was in that moment having the presence to say what will best advantage me despite all of the uncertainty to make sure that I have an ability to play the new normal. I'm really proud of the fact that with incredible counsel from my wife and family and also peers, that I was able to make that decision. And it has been such a tremendous success for me that I did not simply just put my head down and stay the course. I was willing to pick my head up and look around and make sure that I had thought about all options. I think that those moments that folks often speak of around challenge and overcoming strife are the ones that form their careers. Certainly, that was a period that was pretty formative for me. And I'm obviously incredibly grateful the bosses and mentors during that time on both sides that really helped facilitate that change.
Amazing. Thanks for sharing that personal story and congrats on the success that you had and you're still having with the team there. And I can understand why moving in troubled times or the tougher move or looking for that opportunity when it's toughest it can be really advantageous. So really appreciate the story. You know me and you know that I'm a big believer that leaders are readers. And I guess it just doesn't have to be books these days with all the various materials out there. But
Yeah.
are there any that you recommend to our listeners that have had a big impact on you across your career?
It's a little bit dated, but I'm a big fan of the Freakonomics series. So this is Dubner and Levitt. They've put out a number of books around challenging assumptions around why things happened and the economics of change or how analytics and statistics cause you to think about things differently. I do listen to their podcasts and others like it. So I think it's obviously a theme with me, but I do like to try and look at things from a different lens and ultimately take the view that there isn't a causal effect from X input to Y outcome. That's a big premise of what's in their DNA and thinking. That's one that certainly has been on the top of the list for some time.
Awesome. We'll definitely drop those resources in the show notes for those that aren't familiar and would like to learn a bit on that topic. And last question before I let you get back to it. If you could go back and give your younger self early in your career one piece of advice, knowing what you know now, what would it be?
This goes back to the perseverance point. The saying is, if you don't quit, you can't lose. A mantra that certainly, if you put yourself in a difficult, challenging career, you have to live by. That advice has certainly propelled me, through all the change and all of the growth and certainly all of the obstacles along the way. So maybe a good place to end on, and certainly appreciate an opportunity to go down memory lane and reminisce a bit.
Let's go. What a great way to end the episode. Thank you so much for sparing the time. I know how busy you are. So thanks for spending some time with me and the listeners today. And best of luck with the continued growth.
Oh, thanks so much, Peter. Speak soon.
This episode of the podcast was brought to you by the Investment Banking Leaders Club. And to keep leveling up your career, join the club at ibleadersclub.com for exclusive insights, leadership strategies, and career growth resources straight from the industry's top professionals. I want to say thanks to our key partner, Altrum, the global leader in financial deal gifts, awards, and recognition, for their ongoing support of our mission to empower both aspiring and senior investment banking leaders. I really hope you enjoyed today's episode. Thanks for tuning in, and until next time, best of luck on your growth journey.